and welcome back to Money Control's live stream. You're watching Closing Bell with me, Lovisha, Darad, and my colleague Yatin, Mota. Well, it was a tough day for markets. Of course, the major dampener were the Adani Group stocks after its indictment in US federal courts. We saw about 10 to 20% decline in the Adani Group stocks, though it did pair some gains in the later half after the group denied the acquisitions of fraud and bribery. But still, that spoiled any recovery that the markets were trying to make in today's trading session. We saw Sensex close over 400 points lower, while the Nifty closed below that 350 mark as well. Apart from that, we saw IT and Realty indices that performed well. However, all the sectors were majorly under pressure, especially the PSU banks as well. Yatin, we did start the day with a fairly mixed global backdrop, but adding to the Adani Group's news flow and the picture just dampened further.
Clearly, I think yesterday the Nifty on the SGX or the gift side was showing a 200 points gain, but end of the day we saw the gains not only get wiped off but a 200 point downtick on the markets as well. Obviously, the culprit being the Adani Group news in which there were allegations of bribery and fraud with US investors, as well as the Indian officials taking bribe for solar and other power projects. But that apart, the overall market breadth also remained quite weak today. The Nifty closed below that 3,350 mark, and the advance decline ratio also was almost 1:3. So one advance for every 3 declines. And apart from real estate and IT, I think all of the major sectoral indices were down in trade. In fact, if you look at the market statistics for Nifty 50, we had Adani Group stocks losing almost more than 20% each on Adani Enterprises and Adani Ports on an intraday basis. SBI Life and TPC, SBI were also the other losers. So clearly it was a session in which PSU banks and the Adani Group stocks saw some badgering, and overall sentiment of the markets also remained quite weak, given the fact that the news flow continues to remain negative.
Yeah, that's right. If you look at some of the Nifty gainers and losers, well, Power Grid, Ultratech Cement, Hindalco, Grasim and HCL Tech, these were some of the top names. Power Grid, of course, after securing its project in Gujarat. Another, we can see HCL Tech, some of the IT stocks also doing well in today's trading session, up about, nearly 1%. But however, on the losers end of the Nifty 50 continues to be Adani Enterprises, Adani Ports. Adani Enterprises seeing a cut of about 22% in today's trade. Apart from that, we can see SBI Life Insurance, NTPC and SBI. SBI, of course, PSU banks also coming under pressure because of the Adani Group news flow that we have seen around. But on the broader end of the markets also, that also underperformed. However, BSE mid-cap, that saw minor cuts. Yatin, what do you make of the broader end of the markets?
See, if you look at the broader end of the markets, they also were, very stock specific. In fact, if you look at stocks like, Adani Green, Adani Cement, which is basically Ambuja Cement, Honasa Consumer, Adani Wilmar, all of these stocks continue to fall in trade. In fact, if you look at stocks like REC, PFC, who have exposure to Adani power projects, also saw some 7-8% kind of a decline on an intraday basis. Stocks like Aegis Logistics, PNB, ITI, KPIL, all of them saw some profit taking. So it was an overall weak day for the mid-cap end of the markets. However, stocks like Vijaya Diagnostics, Ratnamani Metals, NLC India, on the back of news flows, continued to rally in trade.
Alright, yes, of course. Let's move on to the first stock in focus, which is, of course, the top headline of today.
Lovisha, that was your, I think on a...
Yes, Yatin, what are you saying? Alright, let's move on to the first stock in focus. That was your Adani Group stocks. That was the headline of today. But of course, if we take a deeper look at it, the shares of Adani Group companies, that declined up to 23%. After the US District Court and the SEC framed bribery charges against Gautam Adani and other executives of the group. Now, the prosecutors have indicated that the Adani Group chairperson, his nephew Sagar Adani, and 6 others have allegedly paid $265 million in bribes to the Indian government officials for securing solar power contracts with state electricity distribution companies. The US prosecutors also claimed that this fact was concealed from the US banks and investors from whom the Adani Group raised billions for the solar energy project. Now, the US-based institutional investor, that is your GQG partner, did come out saying that they will review the documents to make any portfolio changes. It holds about 19% stake in the Adani Group stocks. If even GQG partners, that also nosedived about 20% in the Australian markets. Now, Yatin, Adani Group did refute these charges as baseless, but experts believe that this will do quite a reputational damage going ahead for the Adani Group.
Absolutely, Lovisha, as you mentioned that this is a reputation damage, and if you look at Adani Group, they are heavily dependent on US markets for raising bonds as well as debt funds for their projects. Being an infrastructure company, obviously there is the option of shifting back to local banks and local financial institutions, but the cost of debt in the US market is quite low, and probably that advantage was with the Adani Group. But with this controversy, probably the markets now doubt that ability to raise funds, at least for the short term, or till there is a settlement or a final verdict in the matter. Obviously, if you look at the market cap loss today for the Adani Group, it was almost 2.65 lakhs on intraday basis, with Adani Group stocks like Adani Enterprises, Adani Ports as well as Adani Power contributing the most fall in the entire group's market capitalization, more than 1 lakh crore between these 3 companies. So yes, it was a big wealth erosion for Adani Group stocks today ever since the Hindenburg issue happened. So yes, a lot of panic in the marketplace. But what was doing well in the market apart from other stocks was UPL. And the company announced 2 major transactions, including a rights issue, which they will be giving to the shareholders. They plan to raise 3377 crores, almost nearly 3,400 crores via the rights issue. And obviously the ex-right process begins from this month itself. Most of the funds raised via the rights issue will be used to shave off or cut the existing debt which is there on the balance sheet. Not only that, UPL's major subsidiary Advanta, there also 12.5% stake sale will happen, in which it will be a mix of sale by UPL and also fresh funds will be infused by investors. So on 2 fronts, UPL did manage to score good thing. Number one is improve the credit rating via cutting down debt, and also in uncertain period they are able to monetize the stake in the subsidiary at a decent valuation of nearly $2.5 billion. Now, if you look at the brokerages, HSBC has a buy rating on UPL with a target of 680, and HSBC says that the rights issue and the stake sale event is positive and likely aimed at debt reduction. P investment is in Advanta is also a valuation booster, and overall the company appears to conclude the rights issue as the board has announced the terms of the rights issue. So yes, on an overall basis, looks like UPL will be able to reduce debt by over 5,000 crores via the rights issue and the stake sale in the subsidiary. Lovisha.
That's right. Yatin, I was talking to one of the experts in today's morning, and he also pointed out that there could be some bullish positions that could firm up for the UPL stock, and he was eyeing for a target of about 700 rupees per share. So yes, let's see what UPL does in the upcoming sessions. But yes, of course, moving on to the second stock in focus, which was the top Nifty 50 gainer, Power Grid. That stock surged about 5% in today's trading session after it secured power transmission project in Gujarat for 18 crore rupees. Now, the company was selected as the successful bidder for acquiring the Khavda Power Transmission, which is a special purpose vehicle to establish a transmission system for evacuating power from a renewable energy zone in the Khavda area of Gujarat. The project involves developing of about 6,000 megawatt terminal stations in Gujarat as well as Nagpur in Maharashtra. Yatin, now, despite today's gain, the stock is seeing quite a range-bound movement. We had a tepid Q2 performance too. Looks like the power play that we were seeing, the flavor of the market is getting a little fizzled out.
Absolutely. If you look at Power Grid, it is one of those companies which have stable asset and annual income. One of the infrastructure proxy plays on the power sector. Obviously, if you look at the overall ordering which is happening in the power sector, power grid would benefit over a long period of time with 6,000 megawatts and a big transmission line in place. Probably in the future, we could see some good earnings growth. The stock almost 3.5% higher in trade today, with defensive investors also looking to buy shares of power grid, wherein you have earnings visibility as well as annuity income, which probably supports a volatile market.
All right, that's right. Let's move on to the next stock in focus, that is your Indian hotels, where the shares hit new lifetime high and the stock was up for the second trading session after Jeffrey's upgrade. Now, this came after the management outlined ambitious goals to drive consistent growth throughout the FY30. The company aims to open an average of one new hotel per week until FY30, and the analysts believe that the company's strong operational performance, their portfolio diversification, and even the focus on sustainability will provide a robust foundation for its ambitious 2030 goals. So Yatin, Indian hotels, quite a bit of a brokerage upgrades coming in for the stock as well. Jeffries, Motilal Oswal, all of them have been betting big on Indian hotels. What do you make of it?
Absolutely, and if you look at the investor day, I think a lot of confidence shown by the Indian hotels management. In fact, they went on to say that they will add one hotel property every week till 2030. So on an average per annum, we could see a hotel addition of nearly 50 for the next 5 years. In terms of the hotel addition, I think the company has been looking at organic, inorganic, and the management route. So from building hotels to acquiring hotels to having management contracts, gets the right mix of assets as well as higher return on equity, and that is exactly what the investors liked. In a market wherein holidays as well as room rates are moving higher, companies like Indian hotels would benefit, and especially with the Taj brand and the Tata Group along, the company has been able to return significant returns over the past few years, especially post the COVID period.
No, that's right. Now, if we shift focus from the secondary to primary markets, we have the NTPC Green Energy D2 subscription, and it has been subscribed by 83% so far. But we'll watch out and whether or not the subscription numbers get spiked up. But with that, we have come to an end of this edition of the Closing Bell. We will be watching out for Adani Group stocks in tomorrow's trading session as well. But until then, signing off, Yatin and me, do stay tuned to moneycontrol.com for all the news updates and market insights.